public market investing में क्या होता है ना, you can see the share price every day. So it makes me very nervous यार, तो रोज ऊपर हो रहा है नीचे हो रहा है. So I prefer that you fill it, shut it and forget it.
First of all, thank you to everyone who's joined us on a Saturday evening for taking out time to listen to Anupam, Eshwar and myself about startups and what GRIP is doing to enable investments in startups. As some of you might know, or hopefully a lot of you may know and have already tried GRIP, we're a platform that is helping reimagine wealth creation. We believe that access to investment options have largely been limited to 0.1% of India's population, and GRIP's mission is to make those options accessible to all Indians. Over the last 2 years, we've been focused on making available alternative fixed income options like lease finance, inventory finance, and very recently, commercial real estate. And we have facilitated close to 230 crores of investments across these options from investors such as yourself. We're very excited today to launch our first alternative investment equity product, and there couldn't have been a better person to launch it with us than Anupam. To introduce, I don't think Anupam needs an introduction, but I'm going to maybe link it more to a personal story than what all of you already know about Anupam. I met Anupam for the first time in 2016. It was a company I co-founded called Chalo, and right off the bat, Anupam told us exactly what we're doing wrong and what we need to be focused on. Anupam, I still remember that. I don't know if you do, but you told me that we're focusing on too many cities and we needed to focus all of our attention on winning one city. And those interactions that I've had over the years have always reaffirmed the same thing. Anupam is one of the sharpest and smartest people who can grasp any concept in minutes and then will give you his feedback as honestly as possible. But he will also always stand behind you. And that's what he's done at Chalo and now at GRIP. So Anupam, thank you so much for your constant support and direction to the business we're building.
No, thank you, man. Thank you for having me on board as an investor, and great to be here.
Perfect. We also have Eshwar. Eshwar is the founder of Mukunda Foods. We'll get into what exciting stuff we're doing with Mukunda a little later in the session. But Anupam, I want to kick off the session with you. I know there are a lot of people who have seen you, heard you, but there are going to be a few questions that I'd love to get from you and then also go to Q&A. Yeah?
Absolutely. Let's do it.
Okay. You started your journey as a founder when internet was still not the internet in India, right?
Yeah.
But at the same time, you also started your journey as one of the first angel investors, serious angel investors in the country.
Yeah.
What got you started in that journey? And a lot of people today are looking to start that journey for themselves, right? They have either made some amount of savings, wealth, been in corporate jobs and looking to start their journey as an angel investor. What got you excited and keeps you excited to be making angel investments so seriously and so frequently?
Yeah, so, it's a great question, right? Because typically we assume that somebody has better foresight or better intelligence or better something than us, and that's why they got started. But often, the reality is not that way, right? Often you're just in the right place at the right time, and that's how you get started. So, this is a story back to 2007. I had a little bit of money. I'd come back a few years back from the US, and I'd started my company here in 2002 or so. And at that point, I came across this set of founders who were building an ad agency, a digital ad agency, right? And they were trying to sell us their services. And frankly, I didn't know that this was called angel investing, but I took them on the side and I said, look, you guys seem really smart. And why don't you start your own agency and I'll fund you? Because this was very obvious bet, right? India was also going to end up becoming a digital economy just like every economy in the world. And I had lived in the US for 10 years, so I understood that. So these guys said yes, and I wrote them a very large check. Actually, it was most of the money I had at that point. Fortunately, I gave them close to $1 million by that time, exchange rate. And it worked out really, really well for me. It became India's largest digital ad agency. It still is. We sold it in 2013. I became the single largest shareholder. And in 2011 is when I began to understand that this is formally called, angel investing, right? And that's when I invested in Ola and sort of started to understand the asset class and the value that this asset class sort of brings. But yeah, so that's when I realized that this asset class is truly fascinating in many ways, and that the returns, could be pretty interesting, and that it's not something that most people have discovered, right? India's digital economy was just starting out. So I said, Kia, uh, I like this asset class, and the returns can be disproportionate. और also मेरे साथ क्या ना एक थोड़ी मेरे को कमजोरी है that if I can see the metric daily, then I start obsessing over it. तो public market investing में क्या होता है ना, you can see the share price every day. तो it makes me very nervous यार, तो रोज ऊपर हो रहा है नीचे हो रहा है. So I prefer that you fill it, shut it and forget it. And then we'll see what happens in 10 years, right? So for me, that asset class really started working and I liked it because uh, of the kind of returns it would give. The second reason is I wouldn't have to track it every day. And the third and the most important reason was also because I saw so many opportunities, but I couldn't do them all as an entrepreneur, right? But it was very clear that digital world was going to explode. So how do you take part in that? And this was the only way. And so that's how I started investing. One last reason I'd say, and that kind of is become more applicable now, it wasn't then. But in the last couple of years, particularly what I've realized is two things. One is that, you can only grow old if you stop growing, right? And as long as you are meeting young entrepreneurs and coming up with new ideas and business plans, you are growing, you are learning. And so in a way, it is to make myself immortal that I keep investing because my mind stays young, right? And I keep growing. So, and finally, just now, it's become more of giving back also. So it started out with just one reason, but over time, it's become a multitude of reasons. And it sits really well in my wheelhouse. So very long answer to your short question.
No, but thank you for that. And I'm sure that journey for you has also changed over time. Your reasons would
Yeah.
have changed over time. The kind of people you meet would have changed over. I mean, India has gone through a transformation the last 20 years.
Yeah.
And that, is a segue to my second question, which is you meet these companies so early and, often the conversation is just one conversation on a
Yeah.
business that has no metrics, just an idea, just a person
Mm.
across the table. What is it that, from your perspective, gets you to make that investment? What is it in the founder, the company, the idea that you really look for that excites? And I know there are a lot of people messaging that they would love to work with you and maybe pitch to you. So
Yeah.
very useful for them to hear.
It's not as simple to break it down into a science, but that doesn't mean we don't try, right? So I have kind of over time built a bit of a science around it, right? And let's start with sort of the opportunity. How do you evaluate an opportunity? And different things matter at different stages. But if I had to boil it down into a model uh, that encompasses everything, I like to call it my T5 model, right? It's a nice way to remember it. T20, everybody knows, so T5 is a great way to remember it. And let's try to break each one down, right? So if I look at the first T, and this is really, really important to understand, is TAM, total addressable market. And why is TAM so important? And Nikhil, you understand this. You were part of Chalo and now you're sort of in the fintech world. So you understand this. Large markets are very forgiving, right? And when you have strong tailwinds, uh, which gives you great growth rates for the industry, and the market is very large, then all that you should worry about is execution, right? And that allows for a lot of wealth creation. When you have small markets, it doesn't matter how smart you are, how well you execute. The value creation is harder. It's much, much harder. Right? So I think total addressable market is very, very important, perhaps the most important. And when I say total addressable market, I don't mean the market size today, because a lot of the things that we work on or invest in are really futuristic investments. So we have to think about, okay, this is what this person is trying to do today, but what can it ultimately become? You know, is this just a GTM? And often, because of the experience that one has, you can think beyond the founder. The founder thinks this is going to be his business, but you can quickly realize that, wait, this is just a GTM. We can, segue into this larger industry. And so that becomes your potential TAM. And I think that's a very important aspect of investing. And most VCs and private equity players, you'll see, will spend an inordinate time on potential TAM more than anything else, because they understand very clearly that although founders take the most credit for building the business, it's usually the TAM. And the second one is, of course, the second T is team.
Yeah.
Right. And we'll talk a little more about team. I'll come back to that. So let me just park that on the side, because it's very easy to say back good teams, but what the hell does good team mean? Right. People are not walking around with a sign on their back saying we are a good team, or a tattoo from heaven saying we are a good team. So you have to figure out what a good team means. So we'll come back to that, because I think it's a little deeper. I think we can cover some of the other T's, and then we'll sort of come back to this. The third one is timing, right? And this is, again, really, really important. And in some ways it covers TAM as well, but timing is when the market is ready for something. Very hard to figure out. Ideally, right, if you are a late stage investor, you typically want to get in after there is evidence that the timing is right. Right? Even if you're a Series B investor. If you're a very early stage investor, then you want to get in before other people realize the timing is right. Let's take a couple of examples to understand what I mean by timing. Right? A lot of people, and I know a lot of young people investing these days, a lot of people think iPhone was the first touch screen phone, right? And that's why it became what it did. Right? That's actually not true. Before the iPhone, there was Palm Pilot, which is a PDA, personal digital assistant. This was a touch screen PDA. And then Palm Pilot also had a phone called Palm, right? The difference is when iPhone was launched, the internet was becoming something that was always with us, like a utility, right? And bandwidth was becoming always available. And so when you have these two conditions, you can visualize an app store, which is really what drove the iPhone's tremendous and phenomenal success. So that is an example of timing. If you're too early or too late, you often miss out on the value creation, or you create less value than the person who gets it right in terms of timing. I'll give you another example. In the last 5 years, especially in the last 2 to 3 years, we are seeing an explosion of D2C companies. Some of my friends have built 3,000-4,000 crore companies in 5 years, 1,000, 2,000 crore revenue companies in last 2-3 years. One could say, wow, look at this team. They're incredible in terms of execution. Of course they are. But what's more important is timing. Right? The rails are in place. You could not do that 10 years back if you wanted to. A lot of people try. But today you don't have to worry about digital payments. You don't have to worry about logistics. You don't have to worry about people having resistance buying online. All that is addressed. So the timing is great. So I think that's another T. So let's move on from that. Another one is, and this is very important in terms of the stage of investment, right? Is traction. So if you're doing a company that's already kind of found product market fit, then you want to really look at how they are growing month on month. If you have metrics, then you absolutely want to look at that, right? Particularly a seed stage or a Series A company. And traction tells you how well market is accepting them. I love companies that are growing 10% week on week. You compound 10% week on week and see what you have at the end of the year, right? A 1 lakh revenue per month company suddenly looks like crores, right? So I think traction is very, very interesting. And finally, I think technology, uh, uh, in my future, in my vision of the future, right? There are only two types of companies. There are either pure technology companies. So for example, you know, Shadi.com is a pure technology company, right? Because we don't sell anything except creating a platform to connect people. Or Facebook is a pure technology company, or Google is a pure technology company in many aspects, right? So that's one type of company. And then there are technology enabled companies. There will be no third kind in the future, right? So if you think that you can survive without technology, I think you've got something else coming. You've got a train wreck coming down the road, right? So for me, that question becomes important. Of course, if it's a D2C company, it becomes less important, but it still has to be answered, right? How do you think of technology? What do you think of technology? How are you going to use technology for supply chain, for example, if you need to see? So these are the 5 T's. I'm going to come back to team because that requires a little more in terms of how do you evaluate teams. There are fundamentally 3 things that I try to look for, right? And, these can be said, same thing can be said with different words and different names. But for me, the first thing is hunger to win. I think great outcomes are created by restless and hungry people, right? Who just don't like losing. They lose sleep. They just become something they're not when they start losing. Yes, it can work against you as well, but they're able to work at figuring out how to win. They're so hungry to win that they will figure it out, right? So that's my number one quality. How do you figure that out? You look at their past, right? Did they go to IIT, IIM? Why do you use IIT, IIM as a proxy? Not because it's anything magical about it, but it tells me that you are hungry to win, to take part in a competitive exam and get a rank. All right, no problem. You didn't go to IIT, IIM. What did you do exceptionally in your life? In school, in college? Can you demonstrate that to me, right? That is the hunger to win that we look for, or I look for. The second is business acumen. And this is becoming very important, particularly for me. I think there's a lot of great people out there, founding teams, who are very good at building products, but not necessarily building great businesses. And I'm going to say something controversial right now, and that's okay. But if I had to categorize, right, I find a lot of Bangalore guys build great products, but business acumen, for whatever reason, uh, is not as great as the teams in Delhi. Teams in Delhi are very dhanda business. I'm not getting Bombay in between because it's sort of a mix of both. But if you
Perfect.
look,
To know that our product team is in Bangalore and business team is in Delhi.
there you go, fantastic. You got best of both.
No,
तो बिजनेस एक्यूमेन बहुत जरूरी होता है. जब तक प्रोडक्ट चल रहा है, जब तक फंडिंग एकदम ढीले से आ रही है, नो प्रॉब्लम, प्रोडक्ट बनाते जाओ, लोग लाते रहो. बट वी हैव लर्नड, राइट? I mean, just because you have millions of users, engagement doesn't mean you'll make revenue. That thing, build it and they will come and finally we will monetize. I don't buy that, right? So I think business acumen. And the third and the last quality, which above all, more than intelligence for me, is perseverance. Intelligent, to yaar, a lot of people, if intelligence made you fortunes and all the geniuses in the world would be billionaires, right? But that's not how we see it. I think perseverance, which is, call it grit or whatever you want to call it, but the ability to keep getting up and going at it. आप है ना 10 साल कोई काम में लगे रहो ना, और एक बड़े मार्केट में with a good team, तो वैल्यू तो बनना ही है, right? Most people give up too easily. So I think these are sort of the qualities I look for across when it comes to people and teams. I don't know if that helps, but happy
No,
to.
I think it's a fantastic framework. And when I look at our businesses or the business that we
Yeah,
evaluate, also a lot of the five T's, are also interrelated. If you have a large TAM, you need to be hungry to go after it, but you also need technology to go and capture that large TAM, right? Without technology, that TAM is not happening.
yeah,
Timeline and the time at which you launch will really define whether the TAM is large today or 10 years later when you have run out of that perseverance.
yeah,
So
yeah.
I think that's a fantastic framework and very helpful to exactly the conversation we're having. And Anupam, maybe the last question for now is, as people think about making angel investments, there are also for some people that it makes sense to do, and for some people it may not make sense to do, right? As a platform, and you and I have had these discussions multiple times. Who is the right person to make alternative investments? And we want to be very careful about giving that message out because these are more riskier investments. I'm sure you've obviously had your share of successes, but there are also failures in investing in startups. And if you were to qualify what a person should look from personally to make a startup or an angel investment, or some guiding principles about diversification of startup portfolio, what would those few points be?
Yeah, look, I have a slightly different view here in terms of who should invest and who should not. I don't think that is the right question, right? I think the question everybody should be asking is how do I invest in startups, right? And I will explain why. uh, the biggest force in our world right now is digitalization. As I was saying earlier, either you're a digital company in the future or you're a digital enabled company. Every business, every company, every human being, right, will have a digital equivalent, right? There is just no stopping that wave and that force. And perhaps that is the single most powerful force in the history of our world. And I don't see anything else stronger than that emerging in the future either, right? Because ultimately digital technologies power other technologies. Without digitalization, it's very hard unless you get into sort of magnetic waves and all that, but that's a whole different sort of conversation. But I think if you do not participate in the biggest change in the history of the world, I think you are not going to be better off. You're going to be worse off. Yes, you can still make a decent living. I'm sure you can still make returns just sort of investing in the stock market or going after indices and so on. But you will never make alpha returns. I think that the internet democratizes investments that were so far available only for the privileged few, right? To me, the internet is for financial investments what the mobile phone revolution was in terms of access and communication to the average person. Let me explain that to you. Until about 1990s, early 90s, or late 80s, mobile phones have been around since the 60s, okay, guys? If, a lot of people think that mobile phone 10-20 साल से आए, that's all not true. 10 साल से वो एकदम कॉमन हो गया और 4 साल से इंडिया में इंटरनेट पैदा हुआ है. Internet has not been in India for 20 years. Since the geo revolution came, that's where internet really happened, right? But if you think about it, mobile phones have been around for the 70s, but they used to weigh a ton. They used to cost obnoxious amounts of money. And very privileged people had it. Heads of government, business tycoons, and so on and so forth. The turn of the century changed all that. Every average person, every person in the world, forget average person, now can own a mobile phone, be connected, access information, and communicate with whoever they want to. This changes the opportunities for them. Similarly, financial investments, alternative financial investments, until a few years back or even until now, were only available to privileged few. But the internet is changing that, right? Now, that doesn't mean I'm suggesting that everybody start going out there and choosing angel investing and start to pick out companies. No, that's also not how, I made one or two investments, but I started participating in angel groups. I started learning from other people who had angel invested before. So my suggestion would be that everybody should allocate some part of their investment portfolio to alternative investments, whatever they're comfortable with, whatever their risk appetite is. But before you can run, you must walk. You must lean on others, stand on the shoulders of giants, participate in angel investment indexes if you can, right? And a lot of people are creating that. Allocate 5,000, 10,000, 50,000 rupees per investment. Join syndicates, right? Participate in opportunities like GRIP is providing, right? So I think that's the way to start. And once you gain more wealth and once you have more confidence where you can start evaluating companies yourself, that's when you start doing it directly. So that's how I would look at it.
Okay. Thanks for that, Anupam. And maybe the right absolute couldn't find a better time to maybe just introduce GRIP's alternative investment platform that we're doing for startup investments. Before I launched it, we've been asked this question a lot, right? Why startup equity on GRIP? We've been focused on fixed income opportunities. Why introduce this asset class? And this is the simple answer to us. Our ecosystem today has 2 lakh registered users who are all seeking new diversified investment opportunities. These users have come to us so frequently across Twitter, LinkedIn, WhatsApp groups, emails to tell us that they also want to make startup investments, but face the same problem that Anupam just talked about, which is how do we find them? How do we evaluate them? How can we start with those baby steps? At the same time, GRIP has provided financing, capex financing in the form of lease or inventory to close to 100 disruptive companies, all tech or tech-enabled companies. And within that ecosystem of supply and demand of capital, we felt it made sense for us to introduce a new product which had synergy on both sides. We've kept 2 criteria consistent across all the opportunities that you will see from us. Number 1, that the opportunity will be led by a venture capital or a strategic round or a strategic investor, such as the case that's happening in Mukunda, and Eshwar will talk more about it. This ensures price discovery, diligence, and strong corporate governance. You're not investing in a company which is not already vetted by a professional equity investor and who's not going to continue to manage that investment on behalf of you and other shareholders. And this is an important criteria that GRIP has put in place. Number 2, we'll only be working with existing leasing partners of GRIP, which means our team, our credit team, and our business development teams have had the opportunity to track the history of their timeline, of their payments, month-on-month performances, and build a relationship with the founder where we are assured of promoter quality. Right? We've seen a lot of Anupam's 5 T's come into place in these companies, and hence makes sense to then list them on our platform. And with these 2 criteria, we're excited to announce that startup equity is now available as an investment option on GRIP's page. You can see it on our website now, live with the first deal with Mukunda Foods. We're excited to be participating or to create this opportunity to participate alongside Zomato, which has led a $5 million investment into Mukunda. Anupam happened to be one of the angel investors in Mukunda early in their life, and having both of them together was obviously fantastic. Just one small note before I get Eshwar to speak about his company. This is also being enabled through a SEBI registered process. SEBI, in its wisdom and progressiveness, has enabled a system for individuals to participate in or make angel investments through an angel AIF structure, and GRIP is enabling this investment through that regulation. More details are available on our website and with your relationship manager. With that, Eshwar, over to you. Would love to hear more about your company, what you're doing, and the role that you're playing with Zomato now.
Yeah. Hi, Nikhil. Thanks. Hi, Anupam.
Hey, man.
So great hearing from you after a long time. been a very big fan of you on Shark Tank. So I think I never missed a season. So an episode so great. So coming to our journey, right? I think instead of more of an investor pitch, I would like to talk to you the story of Mukunda Foods, right? Why did we start? Uh, and what has happened in the past and where are we right now and what's the future? I think that would be a great way to help convey the whole journey of Mukunda Foods. Me and my co-founder Sudeep started Mukunda Foods when we were still in college. We were in hostel and that's when the company got registered. Like every food entrepreneur, I like food and I wanted to do something in food. Like every food entrepreneur, we wanted to build the McDonald's of Indian food. Every every food entrepreneur looks up to the golden arches when they want to build something in that space. And हमको भी वही लगा था कि यार food में कुछ करते हैं, McD बनाते हैं. And we saw across everywhere, people were selling, restaurants were selling, great Indian food, but nothing had scaled. But burgers, pizzas, donuts, and the whole other Western food had really scaled, and nothing had happened in the Indian food. And hence we started Mukunda Foods as a QSR business. So we opened 2 to 3 outlets. We just copied what McD did. We kept the menu very simple. Idlis, dosas, and vadas was the menu. Large lights, bright screens. People could come, smiling faces at the storefront. You could come and order a plate of breakfast and get your food in about a minute's time. That was the whole concept. People loved it from day one. This was started in Chennai in a place called Nungambakam. People loved the food. We were very happy, me and my co-founder. We registered the company as well. The registration address was our hostel room. And we felt, yeah, up to billionaires, ban gaya hum log. Business is good. All we need to do is scale the number of outlets. Things really became difficult for us when we went for our second and third outlet. Because what happened was the consistency and quality of our food started dropping. People came to us and said, hey, your first outlet is good, your second outlet is not great, the taste is not great, match nahi ho, aap log match nahi kar pa rahe ho taste. And people came back and said, and morning the food is good, the evening the food is not great. To solve a problem, we said, okay, let's hire more people. The moment we did that, because we were bootstrapped, we started losing a lot of money. We felt it very difficult to scale our business. That's when it occurred to us that, hey, we found a great idea. We found people liking the food. Our first outlet is profitable from off the bat day one, but we are not able to scale. That's when we thought I was an engineer, my co-founder was an engineer, kuch karna padega, this is not happening. Because we were from the technology background, we said, let's use technology in the kitchens. Let's bring in a machine to make food automatically. We were focusing on bringing a machine to make dosas because dosa was 80% of our revenue and about 100% of our pain problem. That's when we, searched everywhere, but, kuch automation nahi mil raha tha, kuch machine nahi mil raha tha for us to put in our restaurants and to make dosas automatically. We rolled up our sleeves and said, it's not happening. We really have conviction around the idea. Let's make a machine to make dosas automatically. We went and built a machine. It took a long period of time. We built our machines that could make dosas automatically and we put it in the outlets. The moment that happened, a lot of media covered us. Hindu put us on page 1, Times of India, NDTV. I think a lot of media covered us saying that, hey, this outlet sells dosas made from a machine. That's when a lot of restaurants started reaching out to us and saying, hey, can you sell this machine to us? This is very interesting. They're very exciting. That's when we thought to ourselves that we were thinking, we were not from the F&B industry. We were more from the engineering background, and humko lag raha tha because we are from that space and we are not able to run the food business. But of late, we are seeing that everybody in the industry is not able to scale. Brands were not able to scale consistently and they were faltering. You might have seen this at a lot of places. Great regional brands are not able to go national. Tunde Kebabs is a great Lucknow brand is there. In Delhi, you have some great brands that have not been able to expand. Similar case like Hyderabad, there is a great biryani called Paradise. Many brands were not able to really expand across this thing. That's when we pivoted our business. We from selling food, we wanted to sell technology, we wanted to sell products, we wanted to sell automation, where brands could scale consistently, make great food consistently at scale using machine, using technology. So we pivoted our business. We raised some capital through Indian Angel Network. That's when Anupam came in. We established a production line. We established one of the best R&D centers in the country. We established a countrywide service network to support our restaurants. And we started producing Dosa-matics, the world's first desktop tabletop dosa making machine. You just go add batter, press a button, the machine makes crispy, great dosas automatically. You don't need any manpower. You don't need chefs. You don't need skilled people actually manning your outlets, manning your machines. So off the bat, the business really took off well. In a period of 2 years, we were able to sell close to 2,000 machines in 27 countries. And on the back of that success, we built a lot of other technologies. To cut a long story short, today we have automated close to 90% of global cuisine. We have automated right from pizzas, burgers, Asian food, that's Chinese, Thai, Malaysian. We have automated chai, we have automated momos, we have automated parathas, biryani. So all top 5 cuisines that are consumed in the country are automated. And looking at the kind of customers we have, the top customers in India, right from a Domino's to Ola Foods to Wow Momo to Boxate, Chayos, ITC, Meraki, Samosa Party, Biggie's Burgers. So multiple brands, multiple restaurant partners have bought our machines, bought our technologies, and are able to cook food consistently at scale. So what our products does is very simple. It helps a restaurant owner who has a good product to scale to multiple outlets without worrying about hiring a lot of skilled people, without worrying about wastage, without worrying about consistency and quality. And we do this with a lot of technology behind it. So we are not just a kitchen equipment company. It's not that we make a machine, that's just, doing some mechanical work. There's a deep amount of technology in that. The machine adapts to your restaurant's recipe, your chef's recipe. Your chef can use the machine about 10 to 15 minutes, can program the machine to use the machine. A lot of cloud kitchens, restaurants, and all are really seeing this impactful. The machines have a layer of technology that help a lot of customization and personalization. Maybe Anupam, you go to a restaurant and you want to have your food spicy. Nikhil, you want your food bland. Somebody wants it less oily. India is a country where a lot of personalization is required. Food is not just one size fits everything. That's where our machines come in. It just doesn't replicate the food. It also personalizes the food. And with multiple products and multiple technologies, we are able to power a lot of brands, not only go national, but also start their international journey. And we strongly believe that the F&B industry in India is just starting. I was just looking at a number in Swiggy and Zomato, the platforms. There are about roughly 1.5 to 2 million, 1.5 lakh to 2 lakh restaurants that are listed today. Just in Beijing in China, there are about 2 lakh restaurants. Just imagine the amount of upside an Indian industry has, the amount of upside an F&B industry has. And that's only possible when restaurant owners and cloud kitchens are given tools and robotics and technology that can help them scale food. And we are at the midst of it. We have developed very deep technology and deep moat. So today for somebody of us to copy our machines are very challenging. One, we have patents. So it's very difficult for somebody to copy us. Even somebody copies us, they're about 4 to 5 years behind the journey, because it's not just copying a machine. There's a lot of food science, there's a lot of technology, and there's a lot of on-field support that Mukunda Foods gives. We promise a 99.3% uptime for a restaurant owner. To just put things in perspective, McD, which is one of the world's largest equipment, who buys a lot of equipment, their gold standards are 98%. If you're 98%, they approve your gold standard rating. We're at 99.3%. We do it with a lot of technology. All the machines are connected. They have IoT. We see live data through our Kitchen OS platform. And we don't go to a machine when things fail. We go to a machine before it fails, because we do preventive maintenance, predictive maintenance, and we don't do once a machine fails. So with all these things, we are powering a lot of cloud brands. We are powering a lot of instant food preparation. We are able to make the food faster. Like, for example, very quick thing, we have a technology which we are going to launch fast called Misty. It can steam a momo in less than a minute. Those in the restaurant industry will know to steam momos from frozen to fresh momos takes 12 to 14 minutes. We do it under a minute. We have a machine that cooks biryani in under 20 minutes. So on and so forth, right? With speed, with reduction manpower, with making your restaurant scalable, getting tangible and intangible benefits. I think Mukunda Foods is the midst, and it's like powering a lot of restaurants grow. And we believe that the Indian F&B industry is just scratching the surface, and we are the wings to the restaurant industry. and we would be very happy to have the participation from all the great investors here through the GRIP platform. So happy to take any questions.
Thanks, Eshwar. Maybe two questions that I can see. One is, could you talk a little bit about the investment from Zomato? Zomato recently made an announcement about 10-minute food deliveries and standardization of foods. Does that somehow tie into what the technology that you are bringing to the table?
Yeah, sure. So I think there are a lot of customers today looking beyond convenience, right? People want things to be faster. It's ye jamana hai instant gratification. People don't want to wait a long time. What has happened in the grocery side, right? What Zepto, Blinkit, Dunzo, and Ola Dash has done in the grocery is a great success story. And I'm assuming that food will move towards how food can come faster onto people's tables. That's where technology is helping all the people to make food faster, including Zomato. We are powering their growth into the 10-minute structure. I can't give you exact details of what we are doing, but yes, our technologies are being used to make food faster, to make food fresher as well. It's not just taking food, microwaving it and giving it. It's actually cooking a lot of food, and that's what we are actually doing.
Understood. Okay. And the second question, Eshwar, before we go back to Anupam for now is, how do you think about, how should investors think about investment period and exit? I know this is a tough question to answer for every founder, but if you could shed some light.
Sure. So I would always say my investors, whenever they invest, that I aspire to be one of their best investments. And there are multiple angels who have invested in Mukunda Foods. And right from Mr. Anupam Mittal and Mr. Munjal had invested, SK Munjal had invested, Sanjeev Bikhchandani had invested through IAN, Jayesh Parekh had invested, multiple investors, and we gave them all a great exit in the past. Of late in 2018-19, Rakesh Malhotra through the Incubate family office had invested, and we have more than 4 times increased their value in the last 3 years. So yes, angel investment is risky, I would say, but my confidence is that, hey, the F&B business is going to grow high. When there's a gold rush, the guy who makes the most money is the guy who is selling shovels. And we are selling machines, technologies that help brands grow fast. So we are at the right place at the right time. And we have all the technologies and everything ready. So our aspiration is that I would not say we want, my aspiration is not to become, just to say that I'll be a unicorn in 3 years, 4 years. We may or we may not be, that's not in my hands, or I would not say that's my aspiration. But our aspiration today is, if you're able to power every brand today to become a Domino's or a McD, then that's a revolution which we have helped created. And when that happens, money will come. That's when value will be created to all the shareholders at Mukunda Foods. And that's what I could really promise.
Understood. Thanks so much. And Anupam, maybe a similar question to you, which has come from Akshay in the audience, which is, how do you think about exit strategy for angel investments that you have made? Is there a target IRR in mind? Is there time frame in mind that you typically like to think about?
Yeah, look, it's actually more simpler than that. I don't really look at it as a financial engineer or a typical VC or a PE, because my capital is all prop capital, right? So it's my own capital. So typically, I like to invest in companies that I want to hold on to forever, right? So I am one of those who doesn't think too much about exits. But occasionally, of course, some of your investments get that big that you need to take money off the table, and you should. So when you get to a point where you think that, look, this is probably going to return less than 20-25% IRR to me from here on, that's probably a good time to get out. Or at least that's how I look at it, right? So yeah, that's really the simple logic. But I generally go in with more of a get into good companies and stay for as long as you can.
Understood. One of the other interesting question that I saw is from Vaibhav, which is to maybe pick any one investment that you had where there were actually some red flags, right, as you post the investment, and that in hindsight you thought you could have done differently. It'll be a great opportunity for people to learn what to watch out for post the investment has happened? You don't have, obviously don't want to take names, but if you could...
Pre-investment or post-investment?
Post-investment.
Yeah. So I'll tell you what the biggest red flag is, right? Post-investment, and I've seen this on multiple occasions. It's the lack of transparency. So when you start seeing that, the guy was sharing MIS with you every month and that is suddenly slowed down to 3 months and then to 6 months and then you haven't heard from the guy for a while, that's a big problem. It's a big red flag. The other thing that you might notice is initially the founders communicating with all the investors on one email trail, and slowly they start picking out one investor and start communicating with them individually, saying that guy said this and that guy said this. And that's when I sort of put my foot down and said, look, I don't really want to have any one-on-one conversations with you. Please put all the investors on the same trail mail and we'll talk together. So I think, these are a couple of red flags. One more red flag is when founders, and this is not bad intent, this is just immaturity, founders are in biz dev mode, right? That they never want to share bad news with you. They're always giving you false confidence and over-promising. So they sort of say, no, it's a problem that happened, but it'll be solved by next week, right? So they're kind of in that over-promising mode. And this is not bad intent. It's just a cultural thing where we don't like to displease people because we feel bad about ourselves, right? So I think these are some of the red flags. And they all sort of point to one thing, which is lack of transparency.
Understood. Okay.
Yeah.
Anupam, maybe one question that's related to Eshwar and Mukunda. What made you make the first investment in Mukunda?
Yeah. Look, it was really, and this was not done directly by me, I have to be honest. This was done through IAN, Indian Angel Network, which we were all part of at that point. And the way it used to work, right now IAN has several hundred members, but when we had invested in Mukunda, there was a few of us in Bombay, few of us in Delhi and so on. And so we used to go and see all the pitches physically and then decide whether to make an investment or not. So I think 2-3 things. Ultimately, it goes back to the same 5 T's, right? One was, of course, the passion of the founders. We thought they really sort of really wanted to do something in this space, right? And were willing to persevere for as long as it took. And the second is the potential TAM itself, right? At that point, obviously, the model was different. But we realized that, look, manpower is just hard. And, getting standardization and so on is hard. Of course, there was no Swiggy and Zomato at the scale that they're at this point. And that was not what we were targeting. But we understood that restaurants would have a need for these products and eventually maybe even consumer products, right? Eshwar, if you remember, we had a strategy of trying to sort of build consumer products too. Right? So I think that's kind of what we thought of as the entire TAM, and of course, eventually they found the product market fit in B2B.
Eshwar, if you can just talk a little bit about the round itself that Zomato has invested in and what's the valuation for the company, what's the total raise that you're looking at?
Yeah, it's a $8 million round where Zomato has put in the lead at $5 million. It's a priced round. It's 25 pre-money. And so out of the balance $3 million, we have a good number of soft commitments, but we were looking at Grip because we have a good relationship with you through the leasing model where you're invested in us through the debt fund.
Yeah, that's another question that's come, Eshwar. Why Grip and why not we know you have a number of other commitments and we appreciate that you're leveraging our platform, but why Grip and why making this available to investors such as those on our platform?
So why Grip? I would say mostly through the relationships we have with you guys. And as an entrepreneur, right, you will have many people who would want to invest in you, but you want to have those kind of people on your cap table that you could go the long way with you, right? And who can help you take the right decisions and who will not come in your way when you're taking a decision in the future. When you want to, when the pricing is right, as long as there's nothing economically wrong, You want a good person on your cap table. And we feel Grip is a great partner, and that's the reason we are keen on Grip.
Thank you so much for saying that, and I think the feeling is mutual, which is why we wanted to start this product with participation from Mukunda. I'll take a few minutes to answer some questions that have come generically on the product, right? And I want to provide clarity at this point of time. We want to make sure that any option we provide is regulatorily sound or regulatory enabled, and hence, in certain cases, our hands are tied by regulation. But I think that's a good thing. In the case of startup equity, there is a license provided by SEBI called the Angel Fund License, which is similar to what is utilized by platforms like Let's Venture, platforms like AngelList. Anupam is obviously very familiar with this framework, and we have utilized the same framework to provide these investments. Unfortunately, or fortunately, however you see it, there are certain minimum criteria that are required for participation. One of them is to a self-declaration of 2 crore rupees. Second is a commitment of 25 lakh rupees over 5 years in similar investments. And those criteria are today necessary for someone to make an investment in the space. As a company, Grip is always looking to further democratize access to investments, but we want to make sure we do it in a regulatory compliant manner. To make the investment possible, we're doing it through our platform in partnership with an SEBI registered AIF. And the fee structure that some of you have commented on is a fee on profit. There's a small upfront fee of 2%, but there's a free on profit, which means that if you were to, when you were to have a successful exit, there would be a fee charged by Grip. Otherwise, there's no profit sharing on the investment itself. Grip is trying to differentiate itself from other platforms by making sure that there are curated opportunities based on venture-led rounds, and the fact that all the partners are companies that we have worked with in the past and tracked. And hence we believe we're trying to offer you a slightly more differentiated and curated experience in making these investments. As an investor, please understand that there are concerns around liquidity. Startup investments is not a liquid investment. It is something that you need to assume that you will be holding on for a considerable period of time, 4 to 5 years, even more, and also need to understand that there is a potential of losing capital. The decision to exit, again, we're always trying to make it more easier, more flexible, but the decision to exit today is taken by the fund manager, which in this case is the AIF, and not each individual investor. These are some constraints, and we want to make sure we operate within what is regulatory compliant. At the same time, provide options that can be made as accessible to everyone as possible. Okay, Anupam, I know we have time with you till 5 o'clock, and maybe a last few minutes to go. Any closing remarks? Any closing thoughts on just your journey as an angel investor? Maybe something to share, especially from Shark Tank, and how it's changed angel investment and behave, and the appetite to be a founder and entrepreneur today. Would love to have you close with that.
Yeah, I think that's a big, heavy question, and I'm thinking about how to answer it because there are so many things that are coming to mind. And let me start with making a point about just gratitude, right? I mean, and for me, being in the place I am and making money doing what I love to do, maybe not building all these companies myself, but helping founders build, getting a sense of giving back, actually making abnormal returns while doing it, interacting with young founders like Eshwar, watching with a front row seat while founders disrupt entire industries, right? I'm always rooting for the underdog, right? Because I've been an underdog myself. And so to have a front row seat to that, for me, is just exhilarating in a way. And I'm really thankful and fortunate to be having been at the right place at the right time, right? So I think that's one point. I think the second point is, when you look out, a lot of people at right now, when they look at what's happened in India in the last 10 years, think that they might have missed the bus, right? They look at companies like Zomato, they look at companies like Ola, they look at companies that have, become worth or decacorns and unicorns, and they say, look, that time is gone. But that's not true. In my view, the real digitalization and digital economy, if you want to call it that, is just starting. I think we are probably about 20% of the way in. So the real value creation, look, again, I made that point earlier. The internet in India is not 20 years old, it's 4 years old. So if you go back and map out where America was with 4 years of broadband intensive usage and how much value it eventually created, that's what you will see in this country. One thing has become very clear, right? Besides the platform companies like social networks, and maybe that's been challenged too, and maybe email and search, a lot of areas are being dominated by local companies. Sure, they will have foreign investments in them, but it's local founders who understand local markets that are dominating industries. And I think that's what's going to happen in digital too. So my view is that the current decade, 2020 to 2030, is what I call the decade of entrepreneurship in India. What do I mean by that? See, Indians have always traditionally been traders and artisans and businessmen, but at a very small scale. What is new this time is that entrepreneurship is happening at speed and scale, right? Just like we became the best doctors and engineers in the world when opportunity presented itself, I think we will now become the top entrepreneurs in the world, not just in India, but across the world. And that starts with one thing, belief. When you have role models, when you see people before you having done that, then you tell yourself, I can do it too. So finally, over the last 10 years, starting with the IT revolution, we now have a set of role models that give inspiration to all other founders. And then shows like Shark Tank come in, right, which further propel that feeling by saying that, look, you don't just have to be from IIT and IIM. You don't just have to be this exceptional student to get funding, which is what it was until now. But you can be, an average Joe from a small town, but you're hungry to win. You've demonstrated extraordinariness in some way, and you want to build a business. And there are people who will back you. So I think all these ingredients create for an incredible future for Indian entrepreneurship. And I think angel investing is one way to participate in that. And that's what I do. I do no public investing. I do 100% of my investing in early stage companies. Yes, I know it's high risk, but hey, that's how I roll.
That's very inspiring. Thank you.
By the way, I'm not recommending that for everyone. You need to figure what works for you yourself, right?
Absolutely.
Yeah.
Anupam, thank you so much for your time. Really appreciate it. Always a pleasure.
Thanks, Nikhil.
I'm sure everyone, a lot of takeaways. I can't believe I still take away stuff from you every single time I talk, and look forward to our next conversation.
All right.
And Eshwar, thank you. We look forward to working with you. Thanks to everyone on this. I know there are about 100 more Q&A and chat messages that I have not been able to answer. We've noted all of them down, and we'll reach out and make sure that you get your answers. If it's not available on the GRIP website page, we'll make sure we drop you an email, either speaking to Anupam or Eshwar, and get you the right answer.
Yeah, sorry guys, I can't be around longer. You saw my daughter would get really upset with me. And the last thing I want to do is be in crosshairs with my daughter. 4-year-olds are very feisty. So I got to go. Thanks, Nikhil, for having me. Eshwar, always good to see you. Great to connect again. And great to see Mukunda's success. Thanks, everyone. Bye.
Thank you so much, everyone. Mm-hmm. We'll send a recording of this as well on your registered email IDs. Thanks, Anupam, once again.
Bye.
Bye.
Bye, Nikhil. Bye, Anupam.
Eshwar, bye.
Thanks.